Agenda approval, anybody want to add anything to the agenda?
No.
Okay. Public comment, don't see any public. We're down to review the audit timeline, scope of work. Elsa, thank you for being here and attending. I assume you got Tim's list of questions.
Yeah.
Just turn it over to you guys.
Yeah, it doesn't have to be an inquisition. I mean, just working those comments into your, working those questions in your comments, I think can just be helpful.
Sure, certainly I can do that. I've made notes on everything, so I'll just kind of go through what I have, and you guys stop me if you want me to elaborate on anything, and we'll go from there. All right, so audit scope and timeline. The timeline for completing the fiscal year 25 audit. So right now, this week, I started yesterday, and I'll be here through tomorrow afternoon. This is the interim portion of the audit. So the interim portion of the audit is before year end. I come out and I look at your single audit of your grants. We start that process. I look at your internal controls over payroll, Elgers, Leo, budget amendments, journal entries, and then your segregation of duties. And then for final balances, we review all your final balances for revenues, expenditures on a sample basis. We review your balance sheet, and then we do all that testing when I come back in July, which will be the week of July 21st. And then once the audit and all the open items from the audit are received, we can work on the financial statement draft. We currently have that scheduled for the week of July 28th. But I do know that you guys you're my first audit of the year, so I know it's a very quick turnaround after June 30th to get all that information. So we're typically working on your audit both weeks, just kind of wrapping up. I know the Leo report from Kavanaugh does not typically come in until the end of July. So that's something that we're usually waiting on after I've been out here. I know there's always a few more additional journal entries that may need to be made. So it's a process, and I do appreciate you guys working with us on that timeline because we want to keep our clients on the same timeline this year. I don't know if you've heard, but the LGC extended the deadline. So the deadline is no longer October 31st. The deadline is December 31st. But we do not want, we're not a firm that wants to wait until the last minute to do things, so we do not want to put your audit out to December. We want to get things done so that your report is on time as far as when it's normally issued. So we do plan to issue by October 31st as long as there are no major issues or delays in receiving information. And it is about a 6 to 8 week process. Once all the numbers stop moving, once we've received all of our requests, we use SureLink software, which is a secure software to do our PBC list, prepared by client list, and we receive all of the requests out there. And so once we have everything for the audit, it's a good 6 to 8 weeks because we have to draft the financial statements. They go through our partner tech review, typically 1 or 2 tech reviews, and then we make any changes that the partner requires, and then we put that through a proofing process where our admin team goes in and reviews for formatting, makes everything look nice and professional for the final copy, and then we send Daniel and Alan Thompson, who you typically contract with, to help detail review the financial statements, and we'll make any changes that are required at that point, and then we'll get the final copy ready for issuance to the LGC. So that is a good 6 to 8 week process once we have everything we need to finish the audit.
So I just have a question on financial statement. Do you generate it from take reports and generate it, or go back to transactions, or how do you? What's the source data for the financial statement?
We request a final trial balance, so
Okay.
It'll be trial balance by each account, so it's the
Okay.
final balance for each account. We import that into our software, and we use Excel and Word to
Okay.
compile your financial statements, and then we ultimately put that in PDF format.
Okay, because we Yeah, it's a lot of consolidation to get down to your 4 or 5 categories.
Sure.
Here comes Grace.
Sure.
Hold on one second. Hi.
Sorry.
Okay. We were debating whether we had a quorum or not, so you've helped decide us that we actually have an official quorum, so we were just getting started.
I went next door, I was like, wait a minute, this is
That's
not.
police.
I know, I was like, this is not the right place to be.
Okay.
I just flew down, so I just got that.
Okay. We're
Sorry.
going through the questions, you've probably seen them in advance.
Yes, I have them.
Okay. Okay, thank you.
Okay. And then the next question was how will you coordinate with interim management structure given the recent change in town manager? So I have met with Christy and I met with Daniel and Penny, and we did a planning meeting yesterday and discussed how internal controls have changed since the turnover. And I'm in process on reviewing those. This is something that we evaluate every year, whether there's turnover or not, because sometimes internal processes change. So we're always going to review your internal controls. We're always going to evaluate the risk over each internal control area. And that's just something that we don't just rely on last year, we do that testing every year.
Also, how has the change in the leadership impacted the risk assessment and the audit?
I would say it's certainly elevated our risk assessment slightly, but we also, what we look at mostly with the town manager position is like the tone at the top. We reviewed, had there been any changes at the tone at the top. We also look at your, what your interim town manager is doing as far as anything that's related to GL access or review purposes. I have not seen any major changes that have caused a significantly elevated risk at this time. It seems to be pretty standard that she has stepped into that role, and it was my understanding that she was deputized as a finance officer as well prior to the exit of the former town manager.
Okay, thank you.
Okay. And then I'll
But the highest risk areas?
yes, the highest risk areas, we're in process of sending out a governance letter to all the board members. That letter should go out this week. We discuss in that letter that revenue recognition and management override of controls related to journal entries, budget amendments, payroll, those are our significant risk areas. And then prior year audit results, have all prior year recommendations been implemented? We did not have any findings last year. We did not have any specific recommendations that I'm aware of at this time. So if I find anything during this audit, I will certainly bring that to your attention. But we're just in the beginning stages of this year, so I'm not aware of any recurring issues. You do have a lot of journal entries that are made during the audit process, but that's because your audit is so early in the year that there's only so much you can really get done before I come out here, so that it's a process. If the audit were later, you would probably be more ready for that, just based on timing. So I don't have any concern as far as like journal entries or any of that goes. If I note anything, oh, this journal entry hasn't been made, I'll go to Daniel and say, I don't think this entry's been made yet, and then he takes care of that entry, and it's not something that we're preparing entries for.
So that can be an area of judgment, right, in terms of your entries versus their entries? I mean, are there any significant, like last year, did you find any significant entry that wasn't made?
Not that I recall, but it's mostly, oh, we know that we have to make this entry, we just are still working on that or
Okay.
haven't finished that yet, because we really only have like 2 or 3 weeks in between interim and final, and that's That's not a lot of time to prepare, but it is great that you guys get your audit done so early that it's on time and issued. We've never had an issue with audit timing and submission. We do have some clients that take several months to provide information. I think you guys, your staff do a great job of getting that information in as quickly as possible.
Okay, very good.
Yes.
Thank you.
Okay. What procedures are you performing to ensure continuity of financial controls during the management transition? Again, we're doing internal control testing, we're doing internal control walkthroughs, we're testing your cash receipts, your payroll processes, your budget amendments, journal entries, GL access. And I have not identified any control deficiencies at this time. I know it's early on in the audit, so we reevaluate that on every visit. And then, given the town's small size, how are you evaluating the adequacy and segregation of duties? Again, we do this through walkthroughs and tests of internal controls. Let's see. What compensated controls have you observed where segregation is limited? Typically, in larger units, the interim town manager or the town manager position does not do a whole lot of review work as far as signing off on budget amendments, journal entries and such. They're more of like kind of taking care of the management of the town rather than the details. So that's something that I see here is to kind of help compensate with those a smaller staff in the finance department. The town manager is a little bit more actively involved here. And then, let's see, I don't have any recommendations at this time. IT controls and systems. What financial systems does the town use and how are you generating testing IT controls? So for IT, you guys are using Harris Fusion for your general ledger software. Your IT is outsourced. So there's really only so much we can do on site. We have to rely on those outsourced controls because we're only required to test the controls within the town.
Does Harris do the outsourcing or they just have the software?
It is Fluid IT.
Fluid IT? They're in Dallas, is that right? Or somebody said at one point? Do we know where they're at?
Heather does know where they're at. I'm waiting on the final internal control questionnaire for
Okay.
IT, so I'm not exactly sure of the location.
Somebody years ago said it was on the cloud.
Yeah.
The cloud was in Dallas.
Yeah.
I think there's one station in Dallas, and I think there's also one somewhere in
Yeah, I hope there's
North
backup.
or South Carolina.
Okay. And they handle the security, right? So that,
Yes.
okay.
So Elsie, you rely on a SOC report?
Yes, we typically rely on our SOC report. So what we do is we review that and look at their internal controls. And we also inquire of internal controls that can be handled here, such as password changing. Heather just informed me that multi-factor is coming, which is great because that's a little bit better security. We also look at your terminated employees and access to that. So there are several things that we look at.
Do you assess cyber risk at all?
Cyber risk, we typically, it just depends on if the IT is in-house. We do it typically more. If it's outsourced, again, we're limited, but that's something that we recommend as a management team that you guys kind of check in with the Fluid IT who handles your IT to make sure that they're addressing those concerns as well. I know Heather informed me that you guys went through a cybersecurity audit a few years ago. And you do have an identity theft and protection policy. So I have reviewed that, and I know that you guys do some periodic internal audits of that, and there are employee forms that are signed for that as well.
Okay, and what's the plan if there's a cyber attack? Do we have enough insurance that we just replicate a system of some sort and rebuild it, or what would, is there a plan in
I'm trying to
place?
think.
Or?
It was maybe 2 years ago, we actually had a cyber, or we didn't have a cyber attack, but a large corporation that also uses Fluid IT got hacked, and they shut our system down, shut all the systems down, and they didn't get anything from us, but that, I mean, we were kind of, to an extent, dead in the water as far as doing our normal, like, I couldn't do a journal entry.
Right.
there.
Right.
Yeah.
I think I remember there was it was a scare, I didn't think we were,
Yeah, we weren't at risk,
Uh-huh.
but it was Fluid IT.
it was ransomware, wasn't it? That
Yeah.
they locked them up and
Yeah,
wanted.
and it was I forget, it was a huge corporation, because the corporation was big enough to where they paid the ransom and got it unlocked, because it would cost them more to stay shut down
Yeah.
Right.
than to just pay it.
Do we have significant enough coverage? And does that have to be modified annually with cybersecurity? I'm not familiar with cybersecurity insurance coverage.
I mean, I don't know of, I don't know what insurance, because most of our insurance is through the league of municipalities. I don't know what specific coverages they have
Mhm.
IT-wise.
Hmm.
Tom, that's an area of risk that might be worth exploring a bit.
Yeah, I've heard the horror stories
Some
about
of these-
ransomware.
Some of these small towns are being attacked.
Yeah.
At least to know what the coverage breakdown is in the event it does happen, and if that changes annually, just being prepared for whatever that cost is going to be.
A lot of the local cyber issues that I've seen have been emails.
Mm.
Yeah,
Right.
yeah,
Phishing.
yeah, fishing to get you.
Yeah, they'll get word that we've got this lift station going on and we're supposed to be getting a disbursement, so they'll send in a bill that seems like it's coming from our vendor,
Right,
and maybe one letter's off, you know.
Right,
right,
right.
yeah.
So do we do train, you know, what do we do to?
That's exactly what I was going to say. Are we going to train
I mean,
the
the companies
team
that I-
on phishing and
Kind of
what?
been involved with, I mean,
Yeah.
they're sending you stuff and you better not, you know, I mean, the IT department's trying to trick you. And if you
Yeah,
fall for them,
before we cut any checks based off of like an email, that we always call and speak to an actual person with the number we have on file.
Okay.
We're not-
Okay.
We're not cutting any checks just off of an email.
Okay.
well, and it's not even cutting the check, it's access to the system. Because then once they, you know, if you click on something and they get access, then they can
Yeah.
lock you up.
The multi-factor is going to help with that significantly, because then that'll be specifically tied to whatever individual is accessing it, and then we can follow that those strokes from there, right? Mm.
Okay, as far as revenue recognition and collections, property tax and fee collections, how are you testing the completeness and accuracy of property tax revenue? So when we audit property tax revenue, we are looking at your valuation, we tie that to the tax levy, and we do an analytical review from year to year on your property tax valuation to see what the reasons are for any increase or decrease there. We also review your tax reports for uncollected balances, tax collections, discoveries, abatements, and then we test your receivable to make sure that your receivable matches what's in the GL and what is on your tax reports. And we prepare actually you guys prepare, we audit the schedule of ad valorem taxes receivable and then schedule the net levy.
Now, do you do anything related to occupancy taxes?
Yes, we do. We review that. We review the detailed collection report for occupancy tax, and then we do an analytic on that as well.
Okay, because I hear how hard it is to work with Airbnb and Vrbo and some of these, they don't really tell you the level of, these are the houses that rented for these, they just unless it's changed, they give you $1 and say that's it, or something, you know.
I don't believe we detail review those. We look at, the total collections, and then we're doing an analytical basis on that.
Okay.
Reviewing for any major changes, but, we don't have any specific risk on that where we would pull a sinkhole, on occupancy tax collections unless there was some kind of elevated risk that we weren't aware of, that we became aware of.
How does the town police occupancy tax?
That's what I don't know. I mean, that's a concern, because I know some other towns were bringing in experts or something to really drill into, a lot of people are renting their homes out and not paying occupancy tax, but you can't find them, It's a challenge, like I said, in my understanding, Airbnb and Vrbo and some of those big companies don't really help you. They keep that kind of locked up, and you gotta trust them that they're sending you the right amount.
Yeah, I know Big Casa, which I think is that Verbo?
Vicasa's Vicasa, it was
Yeah,
formerly.
it's different.
All by itself.
The cost is all
Yeah,
by itself.
Vrbo and Airbnb, those are owner direct apps, so
Yeah.
they cut us out, so we
Well,
don't have a way to get
I
that
know for a
information.
fact, my next door neighbor, when we first bought the house, he had his own website, he was renting it out on his own, totally independent of,
And they do that in our community.
yeah, and I bet he's not paying occupancy. Those are the ones, and I don't know how big it is, but it's worth going after, but, I know, I've read in the paper that other towns,
I have heard of people hiring, like, firms that specialize in that, and I don't know what they do, but they find the people.
yeah, my understanding is they're on the internet, they're looking for what's available, because everybody's posting because our neighbor, when he was doing it, it's like his schedule was out there, it's like he has posted, he's either, you couldn't really tell if he was using the house or it was rented, but these were unavailable weeks, which if they were all rental, would have been a significant amount of occupancy tax, and I don't know, he's new, I don't know that he even understood it, but,
Well, now you're talking about possibly levying an individual occupancy tax that's driven by the town, like the board would mandate that, and that would just be if you rent, but then how would you follow those?
well, the tax, correct me if I'm wrong, is a state deal that, how it's, what the amount is and how it's administered and where it can be spent. So enforcement is would be us, right, that says, these people are not paying, per the state law, they're not paying their tax. And then, I assume we can go after them like we would go after other loan taxes or something, and say, you owe us, but I don't know, I guess it still seems kind of like the Wild West out there in terms of what's going on with the rental market and,
Especially with the apps now.
yeah, you can set up your own website and rent your own house out and, not pay the, I don't know, is there a way to crack into that?
The only other way to follow that would be water usage, because you're not, if you say the X number of people live in this home, you're gonna, that'd be the only way that the town could follow up. Water, utility usage would be a great way to do that.
It's out there too on
The
the,
usage fluctuates so much for everyone with the summer months anyhow, though even that would be tough, which also, we don't have the staffing to be able to do that in-house, I know.
I suspect there are firms out there that can dig into.
Oh, definitely.
Find this awfully
well,
quickly. It's not hard.
It's tempting, because it's like,
Why
we
not?
get half of the savings, it's like, that's better than zero,
But it
so.
seems like to me, though, that, Elsa, do you not test it at all? Do you not, do some analytics around it, saying there's 900 permanent homeowners, there's 3,000 homes, I don't know what it is, and on the average rent is whatever?
I've never run anything like that.
That's a significant source of revenue that I would think, and revenue is a high-risk area.
We do follow that revenue very closely.
Yeah, but-
It's been consistently growing, it's growing less and less.
You follow the revenue you get. You
Yes.
don't follow the revenue you don't
Yeah.
get. That's the
That's
audit risk. That's
Yeah.
that's the revenue risk.
Yeah.
And should there be audit procedures around that, testing around that?
Well,
It's hard, though.
yeah,
I mean,
it's hard.
it's-
Individuals though, too.
I know it's hard.
You can, from the risk, from the auditor standpoint, is the risk of exposure. But this one is not even in your scope. How do you, I mean, if it's out of your scope, how do you assess it? I think we have to, as a town, you pretty much have to bring in the scope, but how do we catch that? And that's, because right now it's outside scope. They can't, it's not within.
How do you know that someone's paying it, it's going to a separate bank account somewhere? And being siphoned off in some sort of way? That's a risk.
They do test the occupancy tax.
Totally
that we
valid.
receive, but make sure it's posted.
Yeah, but you don't, I mean, once again, you don't know what's not coming the door. You test what you got, but you've done no analyticals around what the potential is. And if you're only getting 50%, if you're getting 80% of the potential, 70, 60% of the potential, that's one thing. If you're getting 20% or 30% of the potential, that's quite another thing.
Is there a way that we can identify how many houses on this island are for rental?
Yeah, I mean, I don't know about,
I mean,
you got a percentage of, a big percent, right, are through the big hubs and.
No. So there's, in aggregate, we know how many houses on this island, right? So we know how many of those are full-time residents, so we take that off, right? I don't know the number. So let's say you have 1,000 houses here, and we have 100 permanent residents, so we have 900 left. So from Hops, from Holden Beach, from all the rest, so now we have the gap between all the ones that signed the rental agreement. So now we know what the potential loss of revenue would, let's say, 6 months out a year, that could, those that we could target, and maybe from a town standpoint, can we then, these are owner, manager, or whatever, I think once we can identify that, then we now have something that we can work on, because right now, I don't know, I'm sure you can pull up how many total houses on this island, and mine, and minus all the property management houses, what is left?
Yeah.
And that's our delta that we can focus on, because right now, it's hard to say.
Yeah.
Well, the downside with that too is that we have a small community. There's 34 houses in our community, 18 that are improved, 16 unimproved. Those 18 of them, 12 of them are renting, but they keep that to themselves. They're the owners that are renting out that, not using a rental company. So that's what's happening on the island so much that you can't grab that information like you was just.
But that's what we're trying to do, is that, because if you have, like you said, if we have 30 houses, right, and 10 of them, the owner occupied, then the 20, some of them that we know, they use all the vacation home management company. So maybe 10 of them. So now we have another 10 that's up there that we don't know. But so now we can narrow the scope of the project into, okay, what can we do? Focus on this 10. Because right now we don't know 10, we don't know 20, we don't know 5, we don't know.
And I'm trying to think, because I talked to Margaret about this before, and I want to say that she said that most of the time, the only times we gain a new one is when somebody reports that someone's written out.
Right.
So,
Yeah.
That's my point.
Yeah, I remember reading an article.
I think it probably could be worthwhile to look into hiring one of these, because I've certainly heard of firms that do this, like, that go out and.
Yeah, they're detecting, that's what I was reading, they're on the internet, they're looking who's advertising, they're looking at their availability of the schedule, and they're kind of coming to a conclusion that it looks like you're running out 8 weeks this year, because you had that. And then one of them I know just wrote them a letter saying, it's come to our attention that you're renting this out, we want you to be aware, here's the law, you please pay your tax, figure it out and send us a check, but follow the law, and then you trusted that they would send you the right amount, but at least you confronted them and said, you're breaking the law here because you're renting and you're not paying occupancy tax.
So can we give a suggestion to the board to have the staff look for a contingency firm that'll do it on a contingency basis? And you might even want to provide a clemency period to say, you know, if you come clean for last year and this year, we'll let you go, but if you don't come clean, we're going to go back 3 years or 4 years and collect it or something along those lines. Can we make that recommendation to the board?
Sure.
Tom?
Yeah,
Yeah,
that's a good.
you just word it out, and we'll get it, are you taking minutes here, Megan, or who's writing?
She's recording, Penny's gonna,
Oh, okay,
So
well,
you can
then,
do it from that.
yeah,
Okay.
so it's a recommendation to investigate hiring,
The contingent fee firm
okay,
to,
evaluate the occupancy, the current state of occupancy tax.
well,
Who's paying it, who's not?
yeah, okay.
unpaid occupancy tax,
Yeah.
maybe.
occupancy tax.
And you got, I know
Occupancy
that
tax collections, yeah.
most homes are on the island, I've seen, at least in our neighborhood, are purchased in LLCs.
Yeah,
So that'll shorten the list real quick.
so,
Sorry, Elsa.
I'm writing this down to make sure I get it, so it's to explore hire, I mean, basically, issue RFP and see what people, okay,
Yeah,
Yeah, how are they paying it? If it's being paid,
okay.
yeah.
like you said, we can't see what's not there, right?
Yeah, we can't audit what's not there.
But we can, but if it's not there,
Yep.
that means let's go for it, right?
Yeah. I don't know what happens, Elsa, if there's $3 million of occupancy tax that comes in as a result of this and what that does to our audit.
Next year.
I'm sure I'll get an email about it.
Okay. So we kind of diverted, but.
Yeah, the
I think
grant
it's
revenue is
worthwhile.
the next one. This town gets so many grants, and some of them are really old, and we still have things that hang on in terms of requirements, long-term requirements. And how do we test that?
So every year I reconcile your grants. I have a spreadsheet. It's called the single audit determination spreadsheet. And I work closely with Daniel on that I look at any grant revenue that's on the GL and I compare it to your expenditures for those grants. And we reconcile and make sure that any receivables are booked that need to be booked, if the grant requirements are met, that the expenditures are reported on your schedule of expenditures of federal and state awards in the financials, and that anything over our scope for the audit is audited as single audit. So for single audit, we are required to test if you're over 750,000 federal, and that threshold is going up next year to 1 million. So we're required to test 40% or more of those grants, and we test them on a risk basis. So if we've audited that grant recently, the last 2 years with no findings, it's considered a low-risk grant. And we may or may not need it to meet that 40% coverage. It just depends on how many other grants you have. And then for the state side, the state threshold is 500,000. That threshold is expected to go up to, I believe, 750 next year. So both thresholds are going up. So if you have any grants over that threshold, we would audit them if we have not audited them recently without findings. If you do ever have a finding, we do usually re-audit that grant the next year if you have no expenditures. And all the single audit is based on the expenditure side of the grant rather than the revenue side.
So let's say we have a grant that has a long-term tail or a permanent tail to it. For example, you can never build whatever on the pier property, or you could never do something different with Block Q, or whatever, a grant that we've gotten 15 years ago that had those provisions in it. How do we know that we're in compliance still with that grant and we haven't built what we shouldn't have built, or we haven't done with it what we shouldn't have done with it?
I think that would fall to the town to make sure that that's still in compliance. We are only required to do a single audit if it's above that threshold for that current year. So it's not something that we go back and look at prior year grants. They may only have like $1,500 in expenditures. We're not gonna go back to prior year grants and test that all these requirements are still in place. It's just outside the scope of the audit.
But we could have a $3 million grant at risk,
Well,
for
that,
example.
that's, actually audited by the grant.
Granting
grantee.
organization?
Yeah.
Oh, they
Yeah.
continue to audit that and check
Yeah,
on that?
like for, we just had, them come, or they checked out the FEMA stuff. We had people from FEMA come.
So there's grant administrators that will, for each one of those grants that come, it stays in contact
From
with the town.
agencies.
Okay.
I keep thinking of like the boat dock we got out there, which was a long time ago. I don't even know, that money's all spent and done, but, you know, we can't, we got a police who uses it.
Yeah, it's like only boats over 26.
Well, and non-residents, which is we always,
Portable and-
we hear lots and lots of complaints about, you know, why can't I, as a resident, tie my boat up there and listen to a concert and like the grant won't allow. But that's up to them or up to us to withhold our agreement and up to them to check us
They
out.
police us, they may not.
Yeah, okay.
I mean, to me, if you don't monitor that, you got a contingent liability hanging out there that you don't know about, because you don't know whether or not you violated a grant, you know, $20-some million for the refurbishing of the beach or something along those lines. That's what concerns me, is contingent liability that we're not aware of.
And we do ask every year, we do an interview with any questions on fraud concerns. We also ask for any non-compliance with grants or laws or regulations. That's something that we do evaluate for contingent liabilities every year. But as far as like single audits go, we are only required to test if it meets the threshold and the coverage for that year. It's just not something that we do to go back. It's outside the scope of our audit, but there are agencies that do come in and review prior grants, like
Yeah.
federal or state agencies.
When I asked the question last year, David said, well, that's my job. Well, whose job is to check on you to make sure you're doing your job? I mean, whose job is to audit? I didn't find
Yeah.
it satisfactory, but.
Well, the big one, you know, the pier, because we took a Part F grant to buy the property, and it's got all kinds of restrictions on it, so maybe it'll be 5 years from now, we build a building there, you know, were we allowed to build that building on that property per the grant?
We'll be well beyond the.
Yeah, the money, so we already took the money, we
Right.
spent it, we bought the property, but they've got, you know, so that's up to the Part F police or whatever to,
Yeah, I don't
Yeah,
know.
it's for, I mean, which the peers have very much talked about things, so I would not be surprised if they didn't come check that out.
okay. Well, I know there's talk about putting restaurants out there, and it's my understanding, it's like we can't put a restaurant out there, but,
Yeah, no, it's gotta be.
It's got to be similar to the other,
Yeah.
what was previously there, that's what the grant requires.
Yeah, like a
Okay.
grill type thing.
Yeah.
okay,
Not a restaurant.
definitely not a bar.
Yeah, that's a.
Those restrictions are good, but that limits the revenue that can come in, right? So,
That's, yeah, it's,
but I digress, I apologize.
no, that was still hanging out there, because that's a prime example of violating the terms of the grant
Right.
on a, you know, it was a $500,000 grant, but it's a $3 million piece of property that could force us to do something with it.
Yeah. I'll probably ask that question every time we get together and I'm on the audit committee, because I just haven't gotten a satisfactory answer.
Moving on to the pure project accounting, I'll let Daniel speak to some of these questions.
Yeah, so, I pulled the report for all the expenses on the pier thus far, and we have spent, since we bought it in utilities / porta-john rentals, $79,644. Insurance has been $8,647. Professional services, which is the big one, is $333,387. And reno and repair at $66,427. And most of that reno and repair is for the access that's there.
Are you capitalizing all these costs, or are they running through the P&L?
They're, the access way is an asset on the balance sheet.
How about the professional services?
Professional services, those are spent.
They're
Yeah,
running through
those are, I mean,
P&L?
one was Chip Hemingway's group, right, and then the other one's HDR, so, I mean, we've got multiple, you know,
Yeah.
Elsa,
What-
I mean, there's
is
a lot.
that the
Yeah.
appropriate treatment for professional services to run through the P&L as opposed to capitalized as part of the pier?
If they add value to the asset, then you can capitalize it. If it's just like surveying, stuff like that, we usually see those expenses.
Okay, thank you.
I know one set was based on the old building, designing it, and coming up with a new design for that old building, and like, that should be expense, because that just got pitched, and then we've got design services for a new pier, which could be actually used to build the pier, you know, so, a lot of variation in the, you know, there was a lot of money spent earlier to try to save the pier,
Yeah.
and save the building, and turn it into something, and all that is now gone.
I think that's an area we might want some audit comfort on to make sure we're appropriately accounting for those costs and what's getting capitalized and what's not.
Well, and as you may know, we're headed down a path towards getting general obligation bonds to build a new one, so that may be in the next year.
Did you have any more questions about the expense, on the expense side of the pier?
I don't, other than give it a little bit of audit attention to make sure we've got the accounting right in that.
We reconcile your capital outlay in your capital project funds and in your operating funds. And we reconcile that to your total asset additions, and any variances that are material, we acquire and we do further testing. So
Okay.
typically, what's in your projects and what's in your capital outlay, most of the time is being capitalized or should be being capitalized.
So these professional services will be running through a capital budget, or they'll be running through the general budget?
They're in the B part fund.
So that's $333,000. Should that be capitalized? I mean, do you review that?
Some of it was capitalized for like the walkway,
Yeah,
but I mean, if there's no asset to tie it to,
Yeah.
like, there's no pier out there right now,
Yeah.
so we can't say we've got $333,000 worth of a pier.
yeah. I get the accounting, I'm just talking about audit procedures. Do you test that in the P&L with professional services to make sure none of that should be capitalized and appropriate goes through the expense item?
We do, we pull it on a sample basis based on individually significant items.
Okay,
So, we pull both your revenue and expenditure side. I know we're talking about capital, but, for special revenue funds, capital project funds, we look at those as a whole. And so we're pulling individually significant items that meet our threshold, and we do detail testing. We review the invoices. We make sure it's appropriate for the fund that it's in.
Okay.
And we make sure that if it is something that looks to be capitalizable, then we raise
Got it.
that question.
got it. And that's a judgmental sample that you do?
It's, we pull it it is judgmental, yes.
That's not a
because
stat sample?
It's not haphazard.
Okay,
Yeah.
okay, very good, thank you.
Yeah, sure.
And occupancy tax revenues are also a part of this project too, right?
Yes. And we detail test those
Mhm.
based on individually significant items, so.
But, and do you go off of a historical or just whatever exists?
We test whatever exists, and we also do an analytic from year to year to see if it looks reasonable.
Okay.
I think capital projects and infrastructure are probably covered adequately,
Okay.
unless somebody has a further question on that. You got the Greensboro lift station, right? That's a significant project as well, and we need to make sure we get the accounting right for it. I'm sure you guys have got that. Okay.
Let's see, procurement and contracts, so, testing compliance with North Carolina procurement laws. We review your policy to make sure that it's in compliance with procurement laws. And then during the single audit process for any grants that we're testing, if procurement is applicable to the grant, we're pulling a sample and detail testing those contracts.
Okay. No sole source contracts, what, you're probably not even into that yet, you don't know.
Yeah, we're still in the early stages of testing, so
Okay.
we don't have any info to provide on that right now.
Well, the sole source would be, if we put 3 bids and don't get 3 bids, then second time around, we can go with 1 bid if there's 1 bid. Does that fall under sole source, or is that? I mean, that's my understanding of the process.
Mm-hmm.
Yeah.
Okay.
And then you have to go back and test to make sure you've gotten 3 bids, you put out for 3 bids and didn't get any bids back and went with 1 bid
Okay,
again.
okay.
Cash management, I assume we're okay in that area?
Yes, your main, we test your deposits to make sure that they're covered with FDIC and pooling. We also test your investments with state investment laws. The 2 investments that you guys have currently are NC Class and NCCMT. And we verify that those vehicles fall under the state statute, and we always can verify with the LGC. I know NC Class was fairly new, and that was something that we verified, I believe, last year. And we also review your LGC 203 form, where that's all reported to the LGC, so they're aware as well. They keep a very tight monitoring on that.
Contingent liabilities or pending litigation to disclose?
We send out an attorney letter after the final audit is complete to see if there's anything before we do the final report. And so we would evaluate at that time based on materiality and based on if it's reasonably estimated and probable, it would be booked as a contingent liability.
Okay. Pension, OPEB, we're on top of that, I assume?
You guys actually don't have OPEB.
Oh, really? Okay.
Yeah, but Leo, we test, we review the actuarial evaluation when that comes in, typically at the end of July, and we test the data, the demographic data provided to the actuary. And we also test your elders orbit. I've been testing that today, actually going through, making sure that what you have in your personnel records matches what's in the orbit system.
Okay.
Fund balance and reserves, that's something that we look at more after the year end. So we do make sure that your fund balance rolls, and then we look at your adequate reserves for future capital needs. We do look at that based on each fund, and that's something that we do closer to when the financial statements are available and completed. The LGC also, we input all of our information from the financial statements into the LGC data input sheet, and it populates performance indicators, and sometimes those indicators can pop out as a red flag, and we would inquire or investigate from there. I know that for water and sewer, there's typically been one the past couple of years, but it's because they don't take the sewer capacity charges into that calculation, and so it's an explanation that Daniel's had to get to the LGC the past couple of years. But we work closely with the LGC to go through and evaluate any capital needs and any that your reserves are meeting the required percentages.
Good. Okay. Wonderful.
Well, that one's dear to my heart right now. I mean, I understand the general fund and the water sewer fund and all those, but B part, it just seems, everybody's got their eye on it for something. And I don't know how, first of all, we gotta spend it according to the law, a certain percent for, parks and, or for, tourism and certain percent for sand. And I don't know how that gets checked, that we're actually spending that or saving that. And then, reserves for future capital needs, I mean, you know, some of them are, you know, potentially the pier, potentially pickleball courts, you know, I mean, there's just this huge wish list of capital projects, and a lot of them have found their way into the SIP. But I, you know, cut to the chase, it just seems to me we need to look at a B-part fund balance policy or something, and so people are eyeing $7 million saying, let's just take it all and build a pier, pay cash. And it's like, well, what if we get hit with a hurricane? What if, you know, we have no, that's not good. You know, so somehow to say, you know, we need to set aside X for this new fire station, block Q, whatever they are, and say that money is, you know, it's not appropriated, or maybe it's, you know, I don't know what the right term would be.
Yeah.
But it's tagged for, that money is not available for other uses, that money, and how much of it do we have to tag for beach nourishment? Because there's requirements in there, right, that so much of it should be spent on beach nourishment.
And the appropriate classification would depend on, like restricted would be restricted by external laws or grantor's.
Right?
Committed is committed by the board. And then assigned is a lower level than committed, but it's assigned typically for subsequent year's expenditures or whatever purpose you want to assign it for. Committed has to be by a board ordinance. So that may be something that you guys want to consider on that. And you can add a minimum fund balance policy.
Okay, and restricted is legal, what is restricted? I mean,
Law, any external sources like laws or grantors.
okay.
So, oh, I'm sorry, finish.
Well, I'm just thinking, because a lot of times the timing issue, if we're, you know, we've committed to spend this money, we've got contracts in place, but the work's falling behind, they haven't billed us, so that's gonna fall to the fund balance. So that's restricted because we got a contract, you know, or.
The restricted would be like with the part with occupancy tax, it's restricted to beach nourishment or tourism related.
Oh, okay, okay. So that would where the actual B-part law would come in and say, this is restricted, you can only spend this on beach nourishment.
And like in the general fund, a certain amount is restricted by state statute, like we have to keep that amount.
Okay. Yeah, general fund's pretty clear. B-part's kind of, I'm worried it's considered a free-for-all. You know, we got the money, so let's spend it, and not really strategically think about what we're trying to do with it. So then, the last, we got restricted, committed, assigned, and then you'd just have unassigned, which would be the free-for-all.
Did you say committed as well?
This is a pet, I really think we need a fund balance policy for B-part. And start at least thinking about, you know, what have we got committed already, what are we assigned, what are we in the back of our mind, setting that aside for the fire station or whatever we're thinking. Just to start that conversation of, you know, this wish list versus this nice pot of money and making sure it's, so that's what I would, I would like to task this committee to do that, you know, do a first pass or something.
Yeah, I think we can. So my real question in terms of audit procedure really revolves around, and I haven't been following this close, I followed the change in the tax law, but this whole change in policy around FEMA reimbursements and FEMA funding and giving states and municipalities notice that you're not going to be able to rely on FEMA funding anymore. How does that change your perspective in terms of reserves for future capital needs?
I would say there's definitely a need for an increase in that, in your reserves, given this change, but it's very new, so.
Yeah, and I don't expect you to have the answer now, but
Yeah.
at the end of the audit, I think we need to have some clarity on that. And how should we be viewing that as a risk, as a financial risk to the town?
Well, the first way to attack it is through tax revenues, tax hikes and special assessment. But nobody's talking about that, though.
Well, I mean, if you don't have a beach, you don't have the B part, you don't have the occupancy tax. for the most part, if you can't lease your property, and that's a huge risk to the town, right? I mean, it's half the revenue, more or
Right.
less. Half
Well,
the
yeah, I mean,
revenue.
that's one of the, and I don't know how it falls in, but if we got hit with a whopper early storm and just wiped out the rental season, that would wipe out the B part. And,
Right.
And what I heard people have said longer term is, well, FEMA will take care of it, they have historically, you don't have to worry about it. And now I think we have to worry about it. At least that's how I read it. So that should maybe change the way we think about reserves and funding reserves and those types of things, and where reserves go.
absolutely. I mean, it used to be, we had core, we had this core project that was hanging potentially, and then FEMA, now core went away, and FEMA's probably gone away, and
Here
we're
we
on our
are.
own.
Yeah.
I mean, it's up to us to,
I'm sorry to interrupt, I have a plane to catch, so it is okay for me to,
okay.
Okay.
sorry.
Fly safely.
Safe travels.
All
Yep.
right, thank you.
So I think that's part of the whole B part thing too, is, you know, I just saw in the news this week, Oak Island dropped $40 million on the sand project. I mean, they had a $40 million pot of money and they just spent it all.
Yikes.
So, you know, you compare ourselves to that, we don't, we're naked.
And they got-
Yeah, we
they got-
definitely have to think about that. I'm the president of our Properties Owners Association, and for 20 years, they've undercharged, right? You know, it's been $13.75, it's been the same annual assessment. Well, I just did a special assessment, and now we're redoing the pier and redoing the beach access. And so much resistance because no one's done anything
Yep.
in 20 years, and somebody's gonna have to bite that bullet and start focusing on the reserves, because when it does happen, those funds, those BART funds are gonna be pulled away from us. There's no doubt about that, because we're a small part compared to what's going on in the mainland. 2 cents and it was free. Goodness gracious.
Good old days, when houses were affordable.
And then, financial statement preparation, what assistance will the town need in preparing financial statements and no disclosures? So we are contracted to draft the financial statements and the footnotes. We work closely with the town to finalize the MD&A. So what we do as a courtesy is we drop in the numbers from the exhibits and schedules into the MD&A, like the tables and such that have the financial data. And then we send the MD&A to the town to finalize and provide explanations for changes and just kind of the management discussion that falls towards the end of the MD&A that talks about your budgetary highlights and your economic factors that have affected the town.
Okay, okay. I assume that's the way it was going, but I just wanted to confirm that.
Sure. And then any new accounting standards that are affecting this year's financial statements, GASB 101, which is related to compensated absences, were sick leave and vacation. Vacation liability has already previously been reported, but now the sick leave liability will need to also be reported and evaluated. So Daniel and I have been in discussions with that, and we're working together to get a liability estimate provided for GASB 101.
Yeah.
What's a sick leave policy? What is the policy? How many sick days do you get? Do you roll them over?
We get 8 hours a month, so it's 1 day a month, and they do roll over, and any unused vacation over
240,
240,
yeah.
any unused vacation over 240 hours goes into sick leave.
And sick leave rolls over indefinitely until you
Well,
get, that could be a big number then.
Because sick leave, well, we don't pay out for sick leave though, it's,
Use it or lose it.
You use it at the
Years
end.
of service.
For retirement,
Yeah.
Oh, for retirement.
yeah.
That could be a big number, right?
It could be,
For some people, yeah.
and there are two methods that you can use. You can use the FIFO or the LIFO method. And the FIFO method is a little easier, but it usually results in a higher balance. LIFO is a little bit more difficult to calculate, but it usually results in a lower balance. And we've been in contact with all of the units that we audit. In some locations, it might be below materiality, and it may not have to be booked for sick leave. It just totally depends on your policy and the look back period and accurate estimates. So that's something that we're gonna evaluate when I come back in July.
Okay. Interesting.
Yeah, no, so vacation is a true liability, accrued vacation is true liability. If somebody leaves, gets fired, you gotta pay off their vacation balance. Sick leave is not an that source, right? That if somebody quits or gets fired, they don't get paid out for their sick leave, but they stay, it rolls over, if they stay, it rolls towards, well, two,
It accumulates, if you're working, your sick leave's constantly accumulating, and whenever you're over 240 in vacation, that goes towards sick leave, and then that can go towards years of service. So let's say you're a year out from the actual age of retirement, but you've got a year's worth of sick leave, you can retire a year early.
Do you retire a year early? So, or do you take sick leave? Do you take sick leave for a year? Are you still an employee on sick leave? And you get paid that? You get paid that for that year? Or does it just go through years of service in terms of the, considered a year of service in terms of the retirement plan?
Considered a year of service.
So in other words, if you have a year's worth of sick leave, like now, can you leave on December 31st and get paid for a year, get paid for 2026? Will you get paid for 2026? Take the sick leave, be on sick leave for a year.
That's gonna be another personnel question, but
No.
no, I'm almost certain that's a no.
yeah, I mean, my understanding, because we're kind of getting into this with other situations, is it's policy to carry forward the sick leave from, if somebody leaves here and goes someplace else, that sick leave goes to the new employer? Is that I'm being told that's a current.
It's like a state, county thing.
Okay. And it seemed like we'll have to talk to Heather, but it seemed like we passed something recently that, I don't think it had to do with changing employers, but it had to do with carrying the vacation balance over to sick leave. Is that new or is that not new?
I think it kept getting pushed back, and it finally got enacted
Okay.
from what I recall.
Yeah, I remember voting on
I
something.
haven't been here
Okay.
to approve enough to have to
Sure.
personally worry about it, so I'm not
Okay.
super into that.
But I'm being told that when you bring in somebody in from someplace else, their sick leave balance comes with them. But I need to understand that better.
Well, I'm curious to know what that number is if you need to book for sick leave. It'll be
With
interesting.
liability.
It'll be interesting. Okay.
And going concern and financial health, based on preliminary work, are there any going concern issues? I do not see any going concern issues that I've noted, and I can provide a better assessment on the overall health and financial sustainability after final, once the financial statements are prepared. And then any significant financial trends or concerns that we should address, I don't, again, it's very early in the process, so I should be able to provide more information next time.
But historically, there's been no trends or that you're worried about?
No.
Okay.
So the audit data gets loaded to the state, LGC, and then they've got, I love their dashboard. It's, gives you all these ratios, explains them, whatever. Is that accurate in your opinion? Because I look at them and I, compare ourselves to Oak Island and Ocean Island, all the others, and they can, draw us versus them. I'm just curious if that is an accurate depiction of our financial situation, or if there's errors in the differences or something.
They take the financial information that we provide from the financial statements into their data input sheet.
Okay.
And I think they use some of the AFIR as well.
Okay.
But basically they upload that and they do use it to compare units, but it is, just keep in mind, it is difficult to compare one unit to the next because there are always differences and projects going on and needs and everything of the units. So some units want to carry a higher fund balance just to have that security, that cushion, and some units don't want to carry that much fund balance because their citizens will get upset. So it's very, I do believe the information that's out there is accurate, it's just, hard to compare
Yeah.
apples to oranges sometimes.
So it'd be good, I mean, just looking at us, because it gives you trends and things, I think. So it'd be good to say over the last 5 years, we're trending well or we're not trending well.
Sure.
I just was on there playing around with it, it's like, these are some powerful charts that's thrown up there.
And that's available to the public?
Yeah, it's on the LGC, or the State Treasurer's website. At one point, I printed out some, but yeah, you can pick who you want to compare, and then it just spits it out. Okay. We're done with that? I think we're in good shape. My takeaways, just to make sure we're good, is we're recommending that the board look at hiring a contingent fee firm to dig into occupancy tax collections.
And I think it's important that it be a contingent fee firm, because otherwise somebody's gonna scream, why are we spending the money?
Right,
Right.
right.
We're not gonna spend a dime unless we make a dime.
That's
Yep.
right.
Yep,
And it'll be a pretty high contingent fee probably, it'll be somewhere between 30 and 50%, I would guess.
okay,
Would be
And
my
then-
guess.
okay. And then I'm gonna push for fund balance, a B-part fund balance, task us to do a fund balance B-part fund balance policy. Just with restricted, committed, assigned, unassigned, and start to think about
Draft it.
how that money should be spent. Yep. Okay, anything else?
No, this has been.
No, that's it.
Thank you.
This is
Okay.
great.
Yes, thank you, it's been
Yeah.
very, very helpful.
I feel like I
We're coming
know
up the
so
learning
much
curve.
more now. Yeah.
Yeah, yeah. And, yeah, and if anything we can do to help you, let us know. That's what we're
Thank you so much.
trying to do. So with that, somebody wanna,
I move we adjourn.
I second.
okay, all in favor?
Aye.
Aye.
Okay. we're-